This is Leaders in Finance, a podcast where we find out more about the people behind a successful career. We speak with the leaders of today and tomorrow to discuss their motivations, their organizations, and their personal lives. Why? Because the financial sector could use a little more honest conversation. We'd like to thank our partners for their ongoing support. They are Kayak, EY, MeDirect, and Roland Berger. This extra episode of Leaders in Finance was recorded in anticipation of the FinTech Meets the Regulators event, taking place on June 12th in Amsterdam. Organized by DNB, the AFM, and the Holland FinTech Association. Your host is Jeroen Beusekom.
Welcome, listeners, to an extra episode of Leaders in Finance. Today we have a very special episode, an extra episode, featuring representatives from two key regulatory bodies in the Netherlands, the Dutch Central Bank and the Authority for the Financial Markets. And I'm talking today with two executive board members at those institutions. So first of all, Gita Salden, welcome to Leaders in Finance podcast.
Thank you. Good to be here.
Yeah, and I'm happy I'm actually with you here at the DNB. So thanks for having me as well. And then we have Hanzo van Beusekom, who is at the executive board of the Netherlands Authority for the Financial Markets. Welcome as well.
Thank you.
Great to have you guys here. And obviously I had to think about the fact that you were both guests at Leaders in Finance before. And I looked it up. Gita was there at episode 118 and Hanzo was way earlier at episode 52. And to put these numbers into perspective, I think we're currently at 179 approximately. So it has been a while. But again, thanks for being with me. Today we're talking about FinTech and regulation. And we're talking about this in the run-up to the FinTech Meets the Regulator event on the 12th of June later this year. So first of all, before we dive into the topic, really a little bit about you guys. I mean, obviously people can listen to episode 118 and 52, but apart from that, Gita, could you please introduce yourself a bit further and tell me more about what your current role entails?
Well, my current role is at the Dutch Central Bank. I'm responsible at the executive board for the supervision on the pension sector, on the insurance sector, and on the integrity of the sector. And I joined DNB, it's almost a year ago.
And FinTech, related to FinTech, do you have a lot of things that fall under these different responsibilities you have?
Yes, because, we supervise entities that are already there, but we also try to accommodate new entrants, new players. In our opinion, they make sure that the system stays healthy. So there's a little bit of competition, there's innovation. So it's very much to the heart of my role as well.
And same question to you, Hanzo. Could you tell me a bit more about yourself and your current role?
Yeah, I'm currently a member of the executive board of the AFM. I've been in this role for about 6 years now. The last 4 years, I've been responsible for accountancy, financial reporting, but also capital markets, quite a large chunk of my day, and data-driven supervision. I have been responsible for the theme around financial technology for about 5-6 years. I've transferred that to Laura a year ago, but still very much involved with the FinTech group.
Because when we talk about FinTech, and I can ask this question to the both of you, but really, what is FinTech for you guys? Because it's not a term that is in the, it's used in all the different laws. Sometimes it is in regulation, but what is FinTech actually?
Well, it's a good question, and I don't have the unique definition of FinTech. I think we look at it from, it's innovation, driven by technology in financial services. And it can have a broad range of appearances. It can be new products, new business models. But that is the definition I would come to.
Yeah, anything with finance and technology would, I think, satisfy the definition. I also remember from Holland FinTech, they had this large poster. I'm not sure if they still have it, of hundreds of different firms part of the FinTech landscape. I think it's usually meant as anything, not only with FinTech and technology, because that will be too broad a definition, but usually it's new players taking on the large incumbents and trying to innovate into the financial industry. So that will be a bit more targeted definition, I guess. But it means relatively wide and relatively vague, which is okay.
Yeah, and the terminology enabling fintech versus disruptive fintech, is that something that terminology that you hear a lot?
Yeah, if you mean that the underlying technology driving the different fintechs, if that's what you're getting
No,
at?
really,
No.
no. What I actually mean is in terms of competition. Like you have, for example, the major banks, and then you have, a neobank, like a new bank coming up and tries to compete with the major
Definitely.
banks. These are disruptive fintech, and then you have more fintech that enables the existing,
yeah,
the
okay.
incumbents. Yeah.
Yeah, no, I think you see both quite a bit. Just to name names, of course, you see Bunk in the Netherlands being quite large, and in the payments industry, you see Adyen being the disruptors. But I think the number of players which have been tied to the incumbents is actually probably quite larger than the pure disruptive plays. I think in the old days, most people expected to have a stronger role for the pure disruptors. Whereas over time, it has switched a little bit to some sort of an ecosystem where there's a few disruptors, but actually quite a few enablers. And if you want to take that distinction, would you agree, Gita?
Yes. And I would say that mostly in the domain of the payment services. So you see there a lot of fintech driven by technology, but also by regulation. I think the payment service directive with the open access, it did stimulate innovation.
Yeah, I agree. I think the PSD2 has been a big enabler. I think people waited for a long time, but now it's here for a few years. It's going well. Just an example, I just redid a part of my mortgage. I moved houses, and so I've done the mortgage 10 years ago, 5 years ago, and just recently. And you can see also, it's not really fintech, depends a bit on your definition. But you see also the underlying technology of the incumbent banks changing radically. And so all times you had to go there and you had a physical conversation and take like 4 hours, and you had always forgotten that one piece of paper that you really, really needed. You had to go back home, get a new, etc. 5 years ago, I could do it by Zoom already. And so I didn't go, I had no physical contact. This time I had no physical contact, but I don't have any post going back and forth either. So I had a digital sort of surrounding dossier, and then you could upload your stuff. It was still cumbersome. And it was quite funny because the guy was sort of thinking, yeah, this is because AFM and DNB. So, and I was...
You said, I know someone there.
and he could see, of course, who I was and where I worked. So we were both not saying it, but both thinking it. And so that was kind of fun. But so just to make the point, there's quite a bit of technology going on within the incumbents as well. So it's not just fintechs.
What do you think? How would it look like in 5 years?
What do you think?
Ooh. Well, maybe you're asking the wrong person. I think in the industry they know better. So I'm curious what they would tell you. Of course, we monitor trends and developments, and I think a lot of it is about technology. So it's not only AI; it's blockchain. So we see the developments on embedded finance, on decentralized finance, the AI agents developments and trends. So that is trends we monitor just to stay aware of the developments in the sector. But really to pinpoint this is what the financial landscape would look like in 10, 15 years' times, well, you should ask someone else. I wouldn't dare to predict that.
I would.
You would? Okay, Hanzo, please tell me. Yeah.
I think the process innovation will go further. And to just pick up on the example, it was still a cumbersome process. I had to upload 20 different files. Many of them were repetitive information, which was 5 times in the system. So I was really yearning for, give me a fintech which does digital identity extremely well, keeps all my privacy sensitive data in a secure place. If it could be done nationally for many different things, it's fine. If there's a commercial operator, I would probably go for it as well. And then sort of make a link between the bank. I did my mortgage with the bank. And this digital sort of vault would be extremely great to have that, because it was still a cumbersome process. I was actually quite worried that, I work at a regulator, I have an academic education, and it was tough. It was it was really tough reading all the stuff and going through it. So making the process more fluid and level of information less cumbersome, that would be, so process innovation, I definitely think there's room for improvement. I don't think the basic needs of consumers will change that much. So you still want a mortgage, you still want a car loan. So it's the tech layer overlaying that. And I agree with Gita completely on the market structure. Anything would go, and so you could either have large takeovers, new players. But I don't think it's up to us to go there.
No, what I do hope is that we see a bit more of a European landscape developing. If anything, I would say that we still have work to do to come to a truly integrated market, where there is a single rule book, so you don't have different rules and regulations in the different member states. There is a more risk capital, because what we do hear from the fintech industry, it's very difficult to scale up. If you grow, you need kind of more capital. That's difficult to get in the Netherlands, but also in Europe. So my ambition would be that it is not a Dutch landscape, but more a European landscape in terms of scale and possibilities.
Fully agree.
This is Leaders in Finance with Jeroen Broekema.
Let me get back to fintech, because there are a lot of questions I can ask follow-ups that pop up in my mind. But let's come to that in a moment. First, two very basic questions. One maybe easy, one super difficult. So first, the easy one. Could you, for listeners that are not so aware of how the Dutch regulatory landscape, what it looks like, could you explain the difference between AFM and DNB and why these are two organizations?
So that is the simple one.
That's the simple one. So
okay.
Be ready for the difficult one.
Okay. Yeah, we have what we call the Twin Peaks model in the Netherlands. So at DNB, we look at, we are responsible for prudential supervision. That's basically the financial health of financial institutions and the stability of the system. So that's in one sentence our responsibility. And then Hanzo.
Yeah, we are the conduct regulator. So we regulate the conduct between the financial firms and the consumer. And so it's a big part. There's also, of course, accountancy, financial reporting, which is slightly different. So one organization, DNB, makes sure that your money is safe. The other organization makes sure that you're treated well. So that's the easiest way to make a distinction. There's lots of gray areas. We cooperate extremely, extremely well. And the reason that we have Twin Peaks is because there's, of course, tension between the prudential and the conduct type of goals. And you need to mitigate those tensions. You could do it in different ways. Sometimes it's within one organization. In the Netherlands, we have chosen to take it into two organizations.
But I can imagine that as a foreign fintech that wants to lend in the Netherlands, you probably have to, often have to do with both, right? I guess. Or is there one place you can go to, and then from there on you can move to both?
Yes, well, especially for the fintech and all new institutions or people who have a new business model, we started the Innovation Hub. And that's a combination of AFM, DNB, but also the ACM, dus the Authority for Consumers and Markets. It's one hub. It's the entry point, and you can pose your questions. Do I need a license? What kind of regulations apply for me, if any? Because not all fintech needs to do business with us. So that depends. But most of the questions in the Innovation Hub is just about information. What rules are there, and whom do we need to contact? So that is the Innovation Hub.
So it's actually, as a fintech landing here, that's a great place to start. You start there, and from there maybe you don't need anything from neither of you, or you need one of you guys, or both.
Yes.
That's the place to go to.
It's not always easy, but if you delve into it, either by the Innovation Hub or with an advisor, or just look up on the open book rulebook from DNB or the website from AFM, 80-90% of the cases you can solve relatively easily. If you're uncertain, give us a call. We do pick up the phone, and we do direct you where you need to go. So it's not an issue at all.
Then the difficult question is around what makes good supervision. I've spoken about this before with Hanzo, and I think we concluded something along the lines that this could be a podcast of 24 hours at least, or a book, or anything. But maybe for people that are listening in the fintech space, because it's probably the prime target audience today, what are the things, like some key components of good supervision?
Well, to me, it's, why do you need supervision at all? It's because we think that it is very difficult for a consumer or an average person to just check your financial institution. Of course, you have your own responsibility, but at the end of the day, I think it's good to have financial supervisors to check the financial health. Is my money safe? Is it reliable? How do they operate? What is their conduct? So that is the reason behind supervision. So good supervision is when we do our jobs properly. So we reduce the risk. It is risk-based. So it is not that we supervise everything and every issue. That's not doable. But that would also pose a dilemma. Also, if you do too much supervision, you don't have innovation. You don't have any room for maneuver. So it is risk-based, it's proportionate, it reduces risk, and it offers no certainty. So that is kind of, it's not easy to do it good. It's the right balance.
Yeah, no, I agree, of course, with Gita's approach. I like the idea of it's a risk mitigation mechanism. And so there's, I think, for an economist, the basic argumentation would be, look, there's externalities, different forms of them. So with prudential supervision, there's externalities. You can't see from the outside the health of a financial institution. In conduct, you say, look, there's asymmetric information, and the seller knows more than the buyer. So you go back to the market for lemons. And so that's the reason why there is supervision. And then good supervision, it means that you need to understand what are the main risks. So you need to function for identification of risks. And that's not as easy as it seems, because some of the risks are very apparent and in your face. Actually, at Gita's place, they're more difficult than at ours usually, because we have loads of medium and small size risk. Classical prudential doesn't happen all that often. But if it happens, you're really in trouble. And so it's like a nuclear type thing. Whereas we have like more of a steady flow of small and medium type risk usually. And so you need to identify them, then you need to assess them. And any regulator anywhere in the world is long on risk and short on staff, is always the joke. And so if you have a good identification mechanism, you will see hundreds of risks, and you can be flooded by them. And many of them are completely irrelevant. And so there is Gita's idea of risk-based approach. You sort of select or assess the right one you want to target, and then you need to do something. And so you need to sort of squash the few of them. And regulators usually like analysis and thinking. So I think both of us are sort of pushing our organizations to get out there and do stuff and mitigate the risk in the field without too many side effects. Like Gita was saying, stifling innovation and overburdening companies with too many bureaucratic stuff, which is not really helping.
And that's both great answers, thank you. And I think if we take FinTech as an example, take small FinTechs, that is about innovation often, right? For example, with your mortgage, right? Finding solutions to make things, go more smooth and, technological innovations there. But if you take that as an example, does it mean, combine that with your risk-based approach, what you mentioned earlier, that if you're still small, you don't have all the regulation on you?
It could. I think I would look at it. It's not only size; it's also the small in terms of risk. So you can have a very large institution with small risk and a small institution with big risk. So the risk base is in terms of risk small and then and large. And yes, and a lot of the regulation already provides for exemptions. So for FinTech, so they don't need to fulfill all the requirements. But eventually, when the risk grow, then the level of supervision grow. And I think people expect that, and rightfully, because it can be nice to have a new kind of product of service. But if it doesn't deliver what you expect, then it also could pose damage to the trust people have in the system.
Actually, a lot of fintechs that grow and become really big, they ask for a lot of regulation. You could wonder, is that because, to keep all the competition out, or is it for another reason? But sorry, Hanzo, you wanted to add something?
No, that's an interesting point. And no, I really like the idea about innovation. To add to Gita's point, there's exemptions, and there's usually quite a bit of proportionality within the rules. And so usually somewhere it says, actually most rules are pretty cleverly designed. And so usually it has somewhere some clause saying, okay, you need to apply this in a proportional manner. And so that gives leeway. But to make sure that we can mitigate risk and at the same time industry can innovate and grow productivity, you need to have this dialogue. Where is this? What's proportional? And because then you have an open norm and your idea of proportional may not be the same as mine. So you need to have intensive dialogue. So if you take anything away from this podcast, I think this will be a main message. Open the dialogue with the regulator. It could be both central bank, could be AFM. And find the appropriate channels. Don't all email Gita or myself, but there is channels on how to do this. Sometimes you can use an advisor. There's people who can help you here, but it's also fine to do it directly if you want to do that.
Yeah, because if you're very critical to your own role, because it's a great segue into the topic of the open dialogue.
Mm-hmm.
If you're very critical to yourself, like how open is it? If you're a small fintech, is it easy to reach out to the regulator? Do you always get someone to talk to?
I think we are a learning organization. We can always do better. So if we say, okay, we try to to apply the principle of risk-based proportionality is important to us. I'm sure we don't always deliver on that. So we do try to stay in touch with our supervised entities and also learn from them. What is their experience? But it could well be that the regulation allows for exemptions and proportionality, but in practice they don't experience it. So it wouldn't surprise me, and I know that there are also fintechs who are we have a different experience. So we could always do better. So that's always that's important that we have those kind of meetings with fintech meets the regulator. It's a two-side dialogue.
I think it's a mixed bag. It depends a bit. It's much easier than some other countries. In some other countries, I think there's not naming names, but I think quite a few of them sort of say, fintech, we're more on the side of the incumbents. We don't have. We may have some form of sandbox, but how open are we really? So I think our stance is more open than on average. Than in Europe. I think fintech meets regulator is a good example. We've been doing it for like many different years now, and we see Holland FinTech quite a bit. We did a large conference for the introduction of MiCAR, and at the same time, I had a friend who was starting a fintech company, and so he said, "How should I do this?" I said, "Don't call me because I'm your friend, so I can't help you. I won't touch this. Just go to the ondernemers loket and go to Innovation Hub." And it was interesting because I thought we were doing quite well, and he thought we were doing awful.
Yes.
So we did pick up the phone. We gave him an answer. It wasn't an answer he really liked. It took like a couple of weeks, which in my clock is pretty good. We're in the end of the day, we're a government bureaucracy. We're independent, but we're on a civil service sort of time frame. And so a couple of weeks for a decent answer is fine. But he was sort of waiting for the next day or day after. And it was a question where the answer was, okay, you need to go to an advisor, go to a legal help and figure it out. And because that's, of course, the downside of a podcast like this. Like, Gita and Hanzo, they look like okay people. And we can send an email to Innovation Hub. And then the reply from Innovation Hub is, it's not fully newly innovating. This is something you can start. Maybe these are the rules you bump into. It's your responsibility to figure it out, go find help, or make sure you comply. And so that's sort of a standard answer you might get. And if your expectation is they are going to solve my legal and compliance issues and next week I can go, then we are in a different starting place. And that we need to make clear. Responsibility lies with the fintech players. There's commercial advice. We're not your consultant. If there is a dilemma which your consultant or legal advisor can't help and it's new, so it's innovative, and we need to think through and give you some form of comfort. This is where you can go or can't go, or you need to be careful. Then we're willing to do so. So there's constraints attached.
No, sure. I mean, makes total sense, but ultimately it's about communication. Are you
Agreed.
able to communicate and get, relatively fast? And I think what for some people fast is something different than for others, but get relatively fast feedback on what you want to do. I think ultimately it's about that. It's not about that you're not allowed to do something or that you're part of certain regulation, but you want to have a relatively fast, preferably within weeks, an answer on what you want to do.
Yeah.
I think that's the key point here. But the reason that you seem to find it important that there are fintechs, is that mainly because of innovation, or is there other reasons as well?
It's not mainly innovation. I think it's an instrument. I think it's about economic growth, a healthy financial system. If you have diversity in your landscape, that does matter in terms of resilience. A thriving fintech industry. It's also jobs. It's about and better service to people. So there are lots of reasons why I feel strongly about it. That innovation, fintech, it is vital to have it in your economy.
So growth, diversity, innovation, jobs. That's a great list already. So there's multiple reasons to do this. Because I've worked multiple years in the UK. And what I saw there was very interesting in my point of view, which was a very, very close relationship between the regulator and the government, up to a point that, this is my personal opinion, I thought this is very close. And you know what I mean? It could be too close maybe. What's your point of view, or how close can a regulator be with the government? What I mean is promoting the country. To try to get more companies into your country. I mean, obviously, if you don't do much in regulation, you will get more fintechs in, right? That's I think it's probably true.
Yeah, I like the policy idea that if you don't want to do too many things with one intervention, and so regulators are an intervention to keep markets safe and sound. If you also give a too strong innovation or competition mandate to it, or Dutch investment mandate, I would be uncomfortable. So you see it in the UK. Actually, it's in the formal mandate of the FCA to promote competition, but also to promote the UK markets. And we don't have that. And so we're here for fair and transparent markets, for good outcomes for consumers. That's a tough job to do in itself. You would make our lives difficult if you would add and make sure that fintech is always happy and dandy, and because that would make it more difficult for not only for me personally, but also for my staff. So you're pushing on this fintech, which is you're pushing on buy now, pay later. Just to give you an example, which is something we have a nuanced opinion about, and on the negative side. And so we think it's nuanced, but we think this. Not sure if the main players would agree.
Okay.
We think it's extremely risky. We can see a case why people use it, but we see the risk way larger than the benefits. In all honesty, but it's here. It's here. And so every now and then you can see the reports from the AFM and from other organizations where we're pushing against buy now, pay later providers. And look, guys, just loopholes the size of a truck through which underage people can use buy now, pay later, which is not legal. Can you please close the bloody loopholes yesterday? And so that's a firm conversation. I think most of them are now closed or closing, by the way, just for your buy now, pay later listeners. If at the same time I would have had a firm mandate with politicians breathing down my neck, you have to make sure that there's more large fintech players coming in, that conversation would have been more difficult. They would sort of retort by saying, okay, that's interesting. And here your boss board member says that he really welcomes all fintech players in the Netherlands and we should be there. There's different agencies for that.
You're not joining trade missions as a regulator, right?
No way. I wouldn't do that.
No, and I would say, there could be conflicting ideas behind, having that mandate of competition or innovation. At the same time, I think we both feel responsible that we allow, that our prudential or conduct supervision does not hinder.
I agree.
That is something different than you have a separate
competition is a bit of a. You could do competition. I can see it. That's just sort of okay. It's with the ACM in the Dutch. But if it would be with DNB or AFM, I wouldn't have. I would have an issue with sort of the promoting the Dutch financial landscape. And that would be difficult.
Because so it's my words, but it's ultimately there's some very clear boundaries, but then there's also a fine line between having a sandbox, promoting fintech, having an innovation hub, and all those things.
Of course.
So you still want to be attractive to fintechs from other countries to go here, but at the same time, ultimately you're here to safeguard all of us, right? From financial breakdown or anything else.
I think you say it very well. Yeah. It's nothing which is interesting in life is black and white. So there is a bunch of grayish colors. I really favor the innovation hub. I think there's a ton of things we can do to be more sensible and more responsible as regulators. Without jeopardizing the main mission, actually maybe even helping the main mission. Yes. But if I would be having difficulty with contradicting missions at the highest level, so that would be my take.
Could it also be sometimes a bit scary because you have, for example, in the banking landscape, it's not a secret that a couple of banks have the largest part of the of the clients banking with them. But could it sometimes be scary if then a new kid on the block comes in? It could be a bank or an insurer or another, a payments industry. I mean, the Adjens of this world have grown really, really large. Sometimes as a regulator, do you also, find it a bit scary when a new player comes in a market that maybe has been there for a very, very long time, dominated by a couple of incumbents?
I wouldn't say scary. I think the financial landscape, it changes. So it's different from today, from 10 years ago. It will be different in 10 years' time. So what's up to us is to be able to recognize new developments and trends at an early stage. So don't be too late. Be aware of the risk. With regulation, it's always also to have a signaling function to the ministry and to the lawmaking entities in Europe. Because if you regulate something, usually the risk, they pop up somewhere else. The non-banking financial sector, the crypto. So it's more the challenge to be alert on where the risk do pop up.
This is the Leaders in Finance podcast with Jeroen Broekema.
I think your colleague, Laura van Geest at the AFM always says you can learn from fire at your neighbors.
Yeah, correct.
That's one of her favorite comments. So I think and that's maybe a segue into, before we wrap up, a couple of last questions, some international questions. How does the Netherlands do from a fintech perspective? How do we compare, maybe, probably from a regulatory perspective, compared to other countries, maybe to Europe or even more global? Do you have a view on that? I mean, you guys have been traveling into other countries as well. I've seen other regulators.
It depends a bit. And so I think, and it's always difficult to ask us. We should ask, maybe do a survey with FinTech Meets the Regulator crowd. What do you think? You might get a more nuance or more on the downside. I think if you're here, in all honesty, I think they find it sometimes difficult to deal with the Dutch Central Bank or with the AFM. Sometimes for good reasons, sometimes for not so good reasons. So also that is a mixed bag. I think, yes, we can do better. Sometimes the expectations are not really what can be expected from a government agency like the central bank or ours. If I compare it to other European countries, there's a couple of which are really going for the fintech crowd. So you see on the Estonia, you see France every now and then. There's a couple of isles in the Mediterranean where we also think, so we have a passporting regime, of course. We see increasing, by the way, European harmonization also in the practice of supervision. So we're not doing bad. If you look internationally, there's a couple of course, you see the US, very interesting live experiment, pushing crypto quite ferociously, where we are taking a much more conservative view in the crypto space. Yes, we regulate it, but we think people should be extremely careful, specifically on the retail side, with getting into crypto. It's still a huge risk if you compare it to traditional finance, and I don't think it's well understood. So US is pushing crypto like crazy. So you can take different views on that one. I think Singapore is extremely interesting and completely uncopyable. So we can't do it because there is a very close relationship between the MAS, the Monetary Authority of Singapore, which is a single peak. So central bank, financial markets regulator, and very close to the government, and it has complete sovereignty, so it can do its own thing. And there you can do a sandbox, change the rules specifically for the sandbox, which is something we can't and won't do. And there you can really target specific areas. And there you see a very thriving type fintech community. And if you go to a fintech conference in Singapore, you'll see 50,000 people. And so I spoke to the guy from the Financial Market Authority in India and said 50,000 is nothing. We do 100,000. So I have to, typical. So I have to go there and see whether he's right. But it's countries like those which have clear sovereignty, which are not part of Europe, like we are. We're stuck, and for good and bad, with the 27.
Yes. I think I saw a list of the top 10 players in fintech, and we were not in the top 10.
There.
No. So that is, and I think it's more the Singapore, Malaysia, but also South Africa, United States, UK.
As the best place of doing business, or
something like that. So they asked the fintech industry. So, and I think we can learn different things from each entity.
And it's obviously not only regulation, right? It's a lot of other factors involved.
I think it's the infrastructure,
cost of living, infrastructure, talent, capital,
the market scale, the level of digitalization. So there are a lot of elements, talented pool of people. So it's not only the regulation.
It's a good place, not the best place. That would be
but it's a good suggestion. We should post a question on the 12th of June.
We'll do.
We're actually expecting the numbers like in India and Singapore for this fintech regulator meeting.
Thousands
I hope there's a lot of space here. So
we have plenty of room. So that's not the limitation. But
that's true. You have a great building. I must definitely add that. One other question internationally: is it still the case that you're not adding rules to what already comes from Europe? Because often I learned from your colleagues that the Dutch supervisory entities or the regulatory entities are not trying to add stuff to what's already decided in Europe.
Yeah, it's a stated position on our side. I think it goes the same for the central bank. I think the official position is we try to limit gold plating, as it's called, or adding to EU rules to the absolute minimum. And we think that's very important. We've noticed if we deviate from that rule a couple of years ago, the level of arbitrage with the passporting regime is quick. So we've seen one or two retail brokers move because there was a slight interpretation of MiFID rules. You see people move for not only this reason, but also this reason. So yes, we try to influence Europe as much as we can, and then we are order takers from accepting what comes out of that process. One or two exceptions. There's, for example, we have a full commission ban within the Great Kingdom of the Netherlands, and which we're very much in favor of. We think that's extremely important for retail consumers. Sometimes there's a nuisance because you have to pay for advice. We understand. But as a result of that, you are the principal of the advice, and the advisor will sort of advise in your interest, where in most other European countries that can be different. And so we stick to that one, but otherwise we are very much in favor of full level playing field.
Yes. No, for the reasons, as Hanzo said, it's not effective. If you have regulatory arbitrage, we have one European market, so we should have the same rules and regulations, and that applies for the level 1, which is the directive or regulation, but also for the level 2 and 3 set by the European Banking Authority or IOPA, ESMA.
And I think this, in the prudential side, you saw with the SSM 10 years ago, we saw more level playing field also on the operational side of supervision, and we see the same now on the conduct side. So ESMA is getting a larger role in making sure there's a level playing field, not only in the rules, but also in the practice of how to apply the rules.
Before I will thank you for taking the time to speak to me and to my audience. Is there anything that we should have been discussing around fintech, and also in the run-up to this FinTech Meets the Regulator event on the 12th of June? Is there something that we've missed, I should have asked, and we should have been talking about?
No, I think it was a really good interview. I enjoyed it very much. I think
Yes.
I look forward to FinTech meets the regulator. And so one of our risks we have is that we get stuck in our own buildings, although the Dutch Central Bank has a wonderful open floor where people can enter. And but still, we are get stuck in our own worldview and meet our own people. So I really look forward to meeting FinTech crowd. Yes, I also do with the rest of the board. Every now and then I go to FinTech players. So if you think we should come and visit, drop us a line. We may come, we may not come. But if you drop us a line, you have a chance that we do, or send someone else, because we think it's important to stay in touch.
Anything to add, Gita? Or?
We are curious about what is happening in the market. We want to understand and to learn. We have a role to play as a supervisor, but we can have a constructive and open dialogue, and we should have. So we should be open to that. And FinTech Meets the Regulator is one event, but also during the year. Please let us know.
You're very clear that you are open to communication. And of course, with the disclaimer, not everyone. I mean, you guys are very busy people, so I understand that. But maybe, Gita, we can add to your list of 4, right? You talked about why FinTech is important, growth, diversified landscape, innovation, jobs, and maybe the 5th one is to be in early contact and see what's going on in the market. So that's maybe the 5th reason why you.
Yes.
Interesting. Nice one.
Yeah.
Good. Thank you so much, Hanzo van Beusekom and Gita Salden, both in their respective executive boards at the AFM and the Dutch Central Bank, for taking the time. I'm pointing at it now, but I brought you a small present, which I will give you. Listeners can't see it, but I'm pointing at it. Which I will give to you right after this podcast. And again, I'm very much looking forward to see you both again on this event. And for now, thank you so much.
Thanks, Jeroen.
Dankjewel.
You've been listening to Leaders in Finance. We hope you've enjoyed the episode and would love to hear from you. What's on your mind? Who would you like to hear next? Let us know in a review, an email, or get in touch via our social channels. We'd greatly appreciate it. Finally, we'd like to thank our partners for their ongoing support. They are Kayak, EY, MeDirect, and Roland Berger. Don't forget to check out all the other things we do at leadersinfinance.nl. Thank you for listening.